Traders want to hear first from Mr. Ben Bernanke. Joining us now is Michael Cugino, President, Portfolio Manager, Permanent Portfolio Funds, Keith Springer, President of Springer Financial Advisors, Steve Grasso, Director of Institutional Sales at Stewart Frankel and CNBC Market Analyst. Michael Cugino, what are you listening for in terms of your investment strategy? What do you want to hear from the Bernanke?
Well, our investment strategy is being diversified, so we're playing sort of multiple scenarios as we always do. But I mean, I'm looking for hopefully some language where we're going to begin to sort of take the proverbial training wheels off the economy, end this easy money policy, definitely ending QE2. I don't want to hear about QE3 or anything like that. I think they probably should have started raising interest rates several months ago, at least in the beginning phase of that. I think the benefits, the incremental benefits of loose money are no longer there. The issue is fiscal policy and tax policy, and so let's begin to get the monetary policy on more of a normalized basis to see where the economy really stands.
Steve Grasso, what about you? What would you like to hear from Bernanke, and how confident are you that we'll be clearer on what's going to happen going forward, as opposed to more confused, as the results from the Squawk on the Street poll suggest?
Right. Well, here, the number one thing I think most investors want to hear is how are we going to gauge inflation going forward, especially since many blame the Fed for the food and energy inflation that we're seeing currently. So what's the new gauge, or is he just going to pull a Toro and avoid the whole idea about inflation? That's number one. Oh. Number two, what do you do with the dollar? What do you do with the market? Are the high beta plays still on the table here? I expect to sell off no matter what we hear from Mr. Bernanke today.
Keith Springer, do you accept a sell-off? Do you expect a sell-off? And do you think Mr. Bernanke will clarify or confuse on the question of the dollar, which has had so much to do with stocks, commodities, and precious metals?
Larry, he's going to do both. I think he's going to confuse you and try to clarify. The big thing about the dollar is I don't think he cares so much about the dollar. He's so much more concerned about what this country's, where it's going, what it wants to do. I think right now we have what we call the Bernanke tightrope walk. He needs to continue some form of stimulus. I think the economy does need it. I think stocks want to see it, but he can't give so much that it's going to appear desperate or inflationary. So there's definitely going to be some. He's not going to give it a name. He's not going to call it QE3. But any money from the Fed is still going to be quantitative easing or still stimulus. And I think if he pulls it away, you'll get a sell-off. But if you get that he's going to invest proceeds, he's going to invest maturities back into these bonds, I think stocks are going to like it, and you're going to see a rally.
Yeah, I guess he has to be vague enough as to not to be put in a corner. Michael Cugino, what would your one question to the chairman be?
Well, I think it's related to inflation, and I guess it would be, what are you looking for? Obviously, he's for inflation at some level. We've seen it in asset markets. He's commented on it. We're starting to see it creep into consumer goods, as well as assets like stocks and bonds, like commodities and precious metals. How much is enough, and at what point do we need to get rid of that inflation or tone it down to get the economy moving? I mean, how much money do you want to create? How much inflation do you need to see to be comfortable that you've done enough? I think is probably the main thing.
Steve Grasso, what would it take to get you to come and buy stocks? What would Bernanke say to get you to buy stocks?
Well, I think the other gentleman had just spoke about it. If he alludes to any, now I would not endorse this, but if he alludes to any type of easing going forward, I think that adds a bid to the plays that we've already seen.
But Steve, let me just ask you, on the easing going forward, isn't there a consensus? That doesn't mean it's right, but doesn't the consensus say QE2 will end in an orderly way in June, but the Fed's extended period for the zero interest rate will go on forever?
Right.
Now, doesn't that mean the easy money for as far as the eye can see, and hasn't that been very bullish for stocks?
It's been very bullish for certain aspects of stocks, but I think at a certain time you have to worry about margin compression, and everything with the exception of oil service companies are not benefiting from margin compression. I think we will see that in the bottom line, the top line of these companies going forward. But let's remember, once Mr. Bernanke is done speaking, we can all focus on the lifting of the debt ceiling, and that's not a positive conversation either.
A lot of difficult conversations to come. Thank you to all of you. And do not miss our CNBC special report in the next hour. First, the decision on interest rates. That's going to be at 12:30 Eastern. And then